All right, let's be for real. When it comes to the trading space, everybody's a psychologist. Welcome back, YouTube. Today's topic, psychology. All right, now for real. There are hundreds, if not thousands of videos all over YouTube talking about psychology, this, psychology, that, psychology. All right. And nobody really talks about real solutions. It's always, you need to be more disciplined, or if you have enough discipline and you follow your edge, you'll be profitable. My mans, how? Nobody gives real solutions to the problem. Now, I'm not saying I'm a psychologist, far from it, but all this comes down to self-awareness. I want to talk about some of the real problems I had in trading, and more importantly, the solutions to help me overcome them. First issue is overtrading. Now, for me, the solution was simple. Stop making trading the only thing that you're doing. If trading is the only thing that you got going on for yourself, I highly encourage you to expand your view in life. There's plenty of different things you can pursue in this life. Don't let trading be your only thing. Invest your time in multiple ventures, because I put it like this: when you give your energy to different avenues, you don't spend all day staring at the charts, becoming a chart zombie, just trade after trade after trade after trade after trade, loss after loss after loss after loss. You probably revenge trade. The second one is strategy hopping. All right, listen carefully. I'm not proud to say this, but I probably was the king of strategy hopping. And to be 100% honest, I can show you trades back in 2020. I couldn't even tell you what the heck I was doing. Around that time, I didn't care what winning looked like. I just wanted to win. And after I just got tired over the years, and that's when I stopped taking people's advice. I stopped listening to other people. And my initial video, when I kind of stepped away from everything and everybody in social media, and I read those two books, the Candlestick Trading Bible and the Fibonacci book by Carolyn Borodin, that's when things got a little bit better. And I believe that once you back away, focus on one thing and develop your own system, or if you have a mentor, that's fine. Start collecting data and build from the information you have. Shut everything else out. Because once you get exposed to more things, I think the human mind is going to want you to inquire about it. Like, oh, these guys are winning, or you're in this Discord server and everybody's placing trades. You got to cut all that out. All right, and for number 3, we got FOMO, or fear of missing out. Now, we kind of touched on it a little bit, but my FOMO didn't come from the charts. It came from trading communities or other traders. Watching other people take trades while you sit back and stare at the charts creates this kind of anxiety, like, what did they see? Or I'm missing out because maybe I'm not doing something right. And the whole time is, you could be watching other people take trades and their trading philosophy doesn't even fit in your plan. And when you see this over and over again, it makes you feel like you're not progressing as a trader. Or maybe all the time that you spent, months, weeks, years, it makes you feel like you're wasting your time. There's no improvement. I guess when you get tired enough, you come to the realization that everybody doesn't see the charts the same way that you do. And as I've developed as a trader, there's one real key factor that'll help you out. Come here, please. I'll tell you what it is. You ready? Mind your damn business. That's it. Once you mind your business, stop comparing yourself to others, things become 1000% clear. For the next one is greed. All right. People mislabel this one all the time. And everybody has to face reality. No matter where you are on planet Earth, you need resources or money to survive. It's inevitable. People hustle and bustle every day, Monday to Monday, because of money. The issue is not wanting money. It's the love of money. So I want to correct this definition in context. If you know me personally, I serve the Father in heaven. My beliefs and my morals come from the set apart scriptures, the Bible. So let me go pull it up for you. It's 1 Timothy chapter 6, verse 10. Now, when you love something, there is an emotional attachment. And when it comes to money, because of that love, you start making stupid decisions. So, speaking from a realistic standpoint and from personal experience, in life, you can gather and amass huge amounts of money, and it can be taken away from you just like that. And there's nothing you can do about it. Nothing. It can be given away to somebody greater than you because of the nature of your heart. So, I believe once you realize this, you lose that attachment and you stop making stupid decisions. And this is applied outside of the charts. Your everyday life, investments, trading, 9-to-5 career, whatever. Be wise. And moving on to number 5, we have overleveraging. Now, overleveraging wasn't really a super huge issue that I was dealing with, but it still was a problem nonetheless. And for me, the solution was focusing more on percentages and not the account balance itself. Because when you focus on the actual account balance, your emotions get worse and worse and worse. I'll give you an example. Let's say you have a $1,000 account and a $1 million account, and you risk 1% on both of those accounts per trade. Who do you think is going to have more mental pressure? So, again, for the solution, the idea is simple. I believe in focusing on percentages and not necessarily looking at the dollar amount of the account. Because what you can do with one account, you can do with another. What you do with a small account, you can do with a large account. All right. The next one is the account flipping mentality. All right, this is another issue that I really didn't struggle with the most, but the account flipping mentality usually comes from wanting fast money. When I first understood what trading can offer, all I heard was people all over social media. You can flip this account. You turn 1,000 into 10,000, 10,000 to 100,000. And it's like, it certainly can't be that simple. There were quite a few people who could flip an account a few times, but over the long run, it's not sustainable at all. The same amount that you leverage with is the same amount you'll lose in the same day. So after dealing with the whole prop firm race, I've come to the understanding that just build up your own account, because when you constantly feed prop firm after prop firm after prop firm, you're wasting money. Personally, I am all for building from a small account in the long run, because when you deal with prop firms, you could have used all that money to fund yourself and build your own account without losing an entire account after you just passed it. Like, that makes no sense. So I think the issue is people despising humble beginnings. Don't despise humble beginnings. Use that same money you will fund a prop firm. Pay yourself. Invest in yourself. Build your own account. That way, if you go down 4%, you don't lose the entire account. You guys know how some of these prop firms work. Don't get it twisted. It's not inherently bad to have a prop firm account. If you're already past the challenge and you're making money, take the money out. Extract the money. Take the money out, dump it into your account. Easy. All right, the next one is having no defined process. If you do not have a defined process, long term, you are going to end up in ruin. If you're still new to trading and you're under a mentorship, that's fine. But in this day and age, I really hope they're genuine. Now, when it comes to more experienced traders, those who say they've been trading for years, your edge should be a part of who you are. And when you're on your level of mastery, you should enter into a state of flow. And it doesn't matter what you're doing. It could be anything. Martial arts, dancing, if you're an artist, whatever. It becomes a part of you. Imagine somebody asking you to write your name and you go, huh? Like, no, seriously. When it comes to trading, that's how your edge should feel. At least for me, it does. And if not, it's the same thing that I said in the previous video. Get a large sample, execute your plan. With that sample, does your data show that you have a positive equity curve or a negative equity curve? It's just that simple. And even if not, still no big deal. Go over your stats, make some corrections, keep pushing forward. All right. For number 8, we have impatience. This is my kryptonite. Patience, or impatience rather. I am extremely impatient when it comes to a lot of things. Processes, executions, whatever we're talking about, even outside of trading. Coming from a law enforcement background, a lot of guys might be familiar with the term high speed, low drag. If you type that up on the internet, my face should pop up. No, I'm not even kidding you. This is one of the things where, remember what I said, be honest with yourself? This is it right here. Let me be honest. I hate waiting. I don't like to wait for people. I hate having setbacks. I don't like not having control of a situation, especially if it benefits me. I'm strictly performance-based, and I absolutely detest being at the mercy of others. Because of I know how I am, this is one of the primary reasons why I moved from being a primary scalper to move into higher time frames to help curb my impatience. So, in a nutshell, the higher time frames allow me to feel that excitement when it's time to enter into the market, but it also is lenient when it comes to allowing me that same amount of time to calm down before I enter without missing a move entirely. If you have issues similar to mine, you do not belong on lower time frames. Scalping on the 1 minute and the 5 minute, you need to be careful. And the final issue that I had was outcome addiction. I know this for a fact. I mean, we all do. A lot of people are addicted to likes, the followers, the validations. And when you get good on the charts, if you've been there, if you had a string of wins, I know you had the feeling to say, man, I can't wait to post this on all these platforms and social media, because you want to say, hey, look what I did. It's an accomplishment. With that type of mindset, it creates an illusion that you really don't have. I was so obsessed with the outcome that I didn't even care if I was building my account or not. That's how quickly you can lose sight of things because you're worried about one thing more than another. Like a lot of these psychological problems, a lot of people don't pay attention to. They just watch and learn about it, but you got to take real action. You have to take purposeful, intentional actions to make sure that you're in check with yourself, because 9 times out of 10, nobody's going to correct you. But again, if we're focusing on solution, it remains the same. Each psychological issue leads and bleeds into another, making another one stronger. Like the over-leveraging. You over-leverage it because you're greedy. You're greedy because you want to change your life. You want to change your life because you're not happy. It bleeds into another. And then on top of you not being satisfied with your own life because you saw what another lifestyle guru has showed you, it's like, oh, I want to do what they're doing. FOMO. To sum this all up, you have to be in tune with yourself. Once you're in tune with yourself, you fall in love with your own process. I'm telling you, it becomes like, how can I put it? It becomes a thing that you created. It becomes your child. And you have to nurture this child and make him strong. Once you start focusing those behaviors and fixing those problems in your behaviors, that's when things slowly start to change. But that's it for this video. I'll catch you on the next one. Good luck on your trading. I'm out.